Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, November the 25th, the year's 2024. Let's talk trading, weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. As always, let's have risk management in place so we never lose more than we're willing to lose on any one single trade. Looking at the week, we're right around the weekly open, just about a pip and a half below. And as you can see, we had a huge gap up, 57 pips on the pound. There's a lot of gap ups. I'm not sure what happened over the weekend to make that happen, but it happened. And we're putting in the opening range for the week. Notice we stopped right at the low for the opening range for the year. For the year, we are 123, 124 pips below the yearly open, 846 off the high, 289 off the low. And we are definitely playing with the inside bars here. We are below the inside bar from 5 days ago. We are below the inside bar from 10 months ago. And we are right at the weekly inside bar low from 35 weeks ago. No, is that right? No, that's 35 days ago, not weeks. Or is it? No, it is 35 weeks ago. That was way back in March when that happened. The daily range is 65 pips, and you can see there's some euro pairs that have definitely had some nice movement. And the pound, rather the dollar yen has 117 pips, and I'm still wondering why I have not started trading that again. I guess I'm waiting for one of those golden opportunities. You can see here in the last hour, we've been heading south. The previous hour, we had this big up candle or bull candle. Now we've crossed that weekly open, and it looks like we might be heading back down. Still have that huge gap to fill, right down to 125.32 area. And the red rats are enjoying a little feast here. The green rats have already feasted once. Actually feasted twice, it looks like. Bambino Flex indicator says go south. The pivot trading plan near R1. Is a south call. Near the pivot point is a long call. And we haven't gotten near the pivot point yet. Pivot point's just above the previous week's close. So we have not taken out the daily. We've taken out the weekly. And we have taken out the monthly. Pivots, that is. Okay, in and out of that upper wick zone a couple of times. Looks like we're about ready to leave it again here. If we get below 83. And it's bouncing. Price doesn't like staying in the wick zone. Side number usually doesn't drop below 70. For the week, see, last week I wasn't around on Friday, so I'll just give you a little recap of what happened. For last week, we had 227 pips of weekly range, 75 percentile. We did not break out of the high, out of the low by 110 pips, 75 percentile. The high minus the close for the red rats was 182. Close minus low was 45 for the green rats. Across the weekly open, 107 to the north and 120 to the south. So definitely pips to be made trading across those horizontal lines. And here we have today, we just bounced off the daily open here. Or I'm sorry, we bounced off the previous day's open. Here's our open right here. Notice we've got some nice movement here on the M30, the range. You should be able to take 5 pips out of that, if not more. And we just had a lowest high trigger here. And that was good for about a pip and a half. It looks like all of a sudden it hit a 1 ball notice. It hit a previous S3 low here. A support, and it hit it, and that support became resistance. Okay, let's go over here. Looking at the price turn wick zone indicator, you can see we got close. Just put in another one here. New candle opened. You can see price came down here, close. You can put in price turn wick zone, got rejected. You can see here, it needs to come down this way or up to here to fill those, or at least touch those areas. Down here at 25.58 from when price launched. On the H1, we've got the same happening. We're going to be putting in a price turn wick zone in just a couple of minutes here. On H4, you can see we've got it here again. Price likes to come down to these wick zones. You said some people look at the market structure, traders. They're looking at order blocks and things of that nature, imbalances. But I've noticed that, you know, every move, big move up, big move down, has to start with a price turn. I mean, there's just no way around it. You know, the only way you could have a big move up without a price turn is maybe you have a yearly candle. And so that's all you see. But I would even wager then it would you would still see a price turn somewhere. And you can see here on the weekly, way down at the bottom, way up here at the top. For the monthly, you can see we touched it and bounced. So that's one of the, like I said, I've been working in that indicator. So November, so far we have 560 pips, and we are in what? The last week of November. So if we take a look at the ATR percentage, we are at 142, which rivals the 157 here in August. So that's a lot of movement, though we have not moved the year-to-date accumulated range. We're still at 1135, which is not the lowest. So we'll have to see if we can do something. You can see here, 2022, we had big range. and now we're about a third of it this year. So we'll just have to wait and see what happens on that. One other thing, just to bring something home, you have to take your profit when you can. As you can see here in September, you're up over 5%. Now you're down 1%. So you've got to take profit. And the range, 560. August had the biggest at 601 this year. So you can see right now November's in second place. So, trade reminder, price is turning down. Price below the previous month's lower wick zone. Seller strong control. And looking at the week, seller strong control, price between the wick zone. Because remember we had that gap. Oh, on the monthly we had a lower high, lower low. On the weekly, lower high, lower low. That's last week. So right now, of course, like an inside bar. On the daily, we've broken out of that upper wick zone. Now we're between the wick zones. Well, we're almost we're at the psychological 75. And so far today, we've got a higher high, higher low. But yeah, see, we broke that open. Look, we completed that price turn there. Whoops. Why is that doing that? That's too funny. And we took out, we came here, that big range bar. We hit that open. I know I haven't talked much about big range bars lately, but I still looking at them. In fact, I've kind of look at the big range bars in conjunction with the price turn wick zone, because when I was doing the big range bar, I kept noticing price coming down, hitting this wick area, and then returning. And that's kind of what gave me the idea, but doing it on these turns. You can see here, this price turn's already been taken out. So it shows the open price turns. So, fellow traders, that's pretty much it. So, I wish you profits this week. And if you're in the US of A, have a happy Turkey Day if you celebrate. I know some people have issue with Turkey Day, but it means a lot to me, because when I was in college, I missed a couple of Thanksgivings in the computer room all day, half the night, so I had cold turkey. So they're, like I say, it's not that I'm a traditionalist, but it's just, it's a kind of a reminder. It's like, yeah, I had to give up a couple of turkey days to make the grade. So anyway, I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.